If you're wondering what 2025 looked like for real estate, you're not alone. Did home prices skyrocket or plummet? What happened to interest rates? Is it a better environment for buyers now compared to a year ago? Stick around to learn what happened. Without the hype, just insights you can use. Price is always a good place to start, and I'm going to dig down and reveal some trends that you may not have seen. Let's start with a very broad aggregate view of prices that includes condos, townhouses, manufactured homes, and single-family residences in all cities, all in one graph. A year ago, in December 2024, the median sales price in these different types of real estate was $455,000. Interestingly, it rebounded $15,000 in December 2025 to finish at $465,000. However, I removed Scottsdale and then it fell to $440,000, virtually flat for 2025. But let's continue to dig. Since single-family homes account for 80 to 85% of sales, what happened with that group? This graph shows an increase when compared to December 2024 to December 2025, only focusing on single-family residences for all cities. The majority of months were lower than December 2024, but December 2025 did finish higher by 1.6%. Just for fun, what is it when we remove Scottsdale? The trend is more stable and we finished 2025 higher than a year ago by 0.75%. Now, because we are in an inquisitive mood, the thought came to me, what would happen if we compared smaller square footage properties? So here we go. What does it look like when we only focus on single-family homes under 2,000 square feet? Now, this may be more interesting to first-time home buyers or those considering downsizing. Here's the chart for just single-family homes under 2,000 square feet in all cities, including Scottsdale. The median sales price for smaller single-family homes has been flat for the last 2.5 years. Now, that's interesting. However, we can't forget about the condo and townhouse market. Considering all condos and townhouses across the valley, the median sales price in December 2024 was $355,000. At the end of 2025, it ended at $330,000, a 7% drop. And if you're wanting to know why condos and townhouses saw a decline, here we go. We have to look at apartments. Over the past 2 years, after sustained rent increases from 2021 through 2023, apartment rents across the Phoenix Valley have softened, with average rents now trending 2 to 5% lower year over year in many submarkets, largely due to significant increase in new apartment supply and rising vacancy rates, as highlighted by many in the industry. Now, just in Gilbert and Chandler, I've seen many new large apartment complexes come online. And this shift matters because condos and townhouses compete directly with apartments. Even in privately owned condos and townhouses, we're seeing a decrease in rent on price per square foot. And this is translated into would-be condo and townhouse buyers feeling less urgency when rental rates decrease. The impact has been greater on the smaller condos, leading to the price decreases in the resale condominium and townhouse markets. Compare this to single-family rentals, which have been stable for the last 3 years. Now, I know we're going heavy on the charts and the numbers, but I hope it's been helpful to you. If it has, please like and subscribe so we can keep in touch. Now, of course, we have to talk about interest rates. The rate on a 30-year fixed rate mortgage dropped by 0.75% or 76 basis points, 6.91% to 6.15% during 2025. And here's how it affects payments, mortgage payments. For a $450,000 loan, this reduces the loan payment from $2,966 to $2,471, $225 or 7.5%, a solid move in the right direction. Has this motivated buyers? Let's see. We're going to turn to the mortgage applications for the answer. And I've shown this chart before, but it's a great example of how sensitive mortgage applications are to interest rates and may be an indicator of upcoming buyer activity in 2026. Now, this chart shows the mortgage interest rate and mortgage applications on the same graph. Not bad. Notice how in 2020 and 2021, when rates were extremely low, mortgage applications for purchases were sky high. Then June 2022 hit and rates climbed, and with good reason, interest in mortgages evaporated. The rug was taken out from underneath the buyers. In the last 2 years, it is very obvious how highly influenced buyers are to rates. When 2025 began, the 30-year rate was around 7%, and the index for mortgage applications was low. As rates declined during the year, mortgage applications have risen. Hopefully that trend continues, which makes mortgages more affordable. Now a word of caution, don't fixate on the Fed funds rate, hoping it will reveal the future of mortgage rates. It's a short-term borrowing tool, not a mortgage crystal ball. In fact, buyers have learned the hard way that even when the Fed cuts the Fed funds rate, mortgage rates have gone up. If you really want to nerd out on what drives mortgage rates, pull up a chair and explore the 10-year Treasury yield, spread rates, quantitative easing, mortgage-backed securities, and other rabbit holes. Consider yourself invited, but also warned. Summing things up, where does this leave buyers? Consider the current home buyer environment and some reasons why it is better than a year ago. Single-family home prices are stable, and condos and townhouses have seen price decreases. Another thing, seller-paid concessions are more common than ever. They are now part of over half of the transactions, and these seller concessions can be applied toward buyer closing costs, interest rate buy-downs, or credit in lieu of repairs. Something that was almost unseen during 2020 to 2022. Consider the sales to list price ratio. Stable prices are a byproduct of increased negotiating leverage. The sales to list price percentage is now just above 97%. And compare this to 4 to 5 years ago when it seemed everything was selling for over list price and there were no concessions to be found. Interest rates have decreased by almost a full percentage point, increasing affordability, reducing the loan payments by 7.5%. Of course, the other component is supply. How will sellers, many of whom will become buyers, how will they react to the current environment? As always, a major factor for Phoenix home prices is supply, or the number of homes for sale. So how did 2025 end in terms of supply compared to the beginning of the year? For example, Phoenix started the year with 2,053 listings and ended with 2,138. 4% increase. In fact, a majority of cities saw less than a 10% change in ending inventory for 2025. Others did see an increases of over 10% in inventory during 2025. Now, this will contribute to stable prices. The wild card is where supply or inventory of homes for sale goes in 2026. And if anyone tells you they have the answer, ask them to show you their crystal ball. I don't think it's as shiny as they think it is. If there's any topic you want me to cover in the next market video, let me know. If I can help in any way, don't hesitate to reach out. Thank you.